Tomorrow, 5th December 2025. And the entire narrative of the Indian markets now sits on two very clear pivot levels. For Nifty, if bulls defend 25,900, the road toward 26,300 opens, and if that level gets taken out with strength, the index can expand further into momentum zones. But if 25,900 breaks, the market instantly shifts character, and 25,600 becomes the first magnet. For BankNifty, the battle is even sharper. If the index protects 58,900, bulls get a pathway back towards 60,000, a psychological round number, a gamma cluster, and a liquidity zone all rolled into one. But if 58,900 slips, volatility can increase dramatically toward 57,400. And for tomorrow's open, your first 15-minute decision levels remain crystal clear: Nifty at 26,000, BankNifty at 59,200. These two levels, and the behavior around them, will script the tone for the entire session. Today's closing session gave traders a subtle but important signal, a market that wants to recover but is not ready to abandon caution. Nifty reclaimed the 26,000 zone with determination, while BankNifty stayed inside a consolidative band just under 60,000. What this sets up for tomorrow is a high-quality confirmation day. Not a blind directional bet, but a structured, level-driven narrative where the market will reward those who wait for evidence rather than anticipation. Across the world, risk appetite showed signs of stabilizing. The US markets ended higher, not with fireworks, but with a disciplined climb that suggested investors are leaning gently into growth without overcommitting ahead of central bank commentary. The Dow led with relative strength, the S&P 500 followed with measured gains, and the Nasdaq closed modestly higher, supported by technology and semiconductors. This is important for India for two reasons. First, it strengthens the narrative for Indian IT stocks, especially those benefiting from currency tailwinds. Second, global funds allocate more aggressively into emerging markets when US markets remain stable with controlled volatility. In Asia, Japan extended its rally, reflecting strong cyclical momentum and supportive corporate reforms that continue to anchor foreign inflows. Hong Kong saw renewed buying interest, led by select tech and financial names. Asian risk sentiment often acts as the pre-market emotional tone for India, and today, that emotion was reasonably optimistic. Commodities, however, introduced a note of caution. Brent crude ticked higher on fresh geopolitical developments. Gold eased slightly as investors rotated toward equities and held cash ahead of policy commentary. For India, rising crude prices typically translate into pressure for oil marketing companies, inflation expectations, and by extension, RBI's tone. A stable global equity market but an uncertain commodities market means India's open tomorrow may have a split narrative: optimism from global equities but discipline from the macro side. This blend, supportive equity cues, mixed commodity cues, gives India flexibility without complacency. It allows the market to rise, but demands that it rises with evidence, not hope. Domestically, the Indian market continues to display an intriguing mix of strength and restraint. Nifty's climb above 26,000 was not explosive, instead, it was strategic. This tells us that institutional players are still in the process of repositioning rather than aggressively chasing prices. On the fundamental front, the rupee's intraday softness acted as a tailwind for exporters, most notably technology and select pharma. That explains today's strong rotational move into IT, which absorbed a significant portion of the day's buying interest. BankNifty, in contrast, played its own game. While it did not break down, it did not break out either. This type of behavior usually occurs when institutional flow into financials is steady but not enthusiastic. Banks tend to act as the backbone for Nifty's large directional days, and the fact that BankNifty stayed neutral today suggests Nifty's move was more rotational than structural. For tomorrow, that dynamic becomes important. If BankNifty joins the move, Nifty's upside potential can expand dramatically. If BankNifty stays muted, Nifty may continue to move with pockets of isolated strength rather than broad participation. Mid-caps and small-caps remained subdued, a familiar sign when market breadth does not fully confirm the headline index move. Breadth remains a critical early warning indicator. For now, it is signaling caution, not euphoria. Let's break down why certain sectors moved the way they did. The strongest sector of the day was information technology. Currency fluctuations added tailwinds, but the deeper reason was sentiment. Markets were looking for earnings visibility, and in uncertain macro environments, tech often becomes the clarity sector. A strong US session combined with rupee weakness amplified demand for frontline IT stocks, triggering breakouts and follow-through buying in names like Tech Mahindra and TCS. Life insurance names found support too, with HDFC Life and SBI Life participating. These stocks often behave as defensive growth, offering stability when traders want exposure but not volatility. Energy and metal stocks were mixed, reflecting global commodity uncertainty. Rising crude prices buoyed upstream energy but exerted pressure on downstream players. Metals saw both demand and hesitation due to global industrial signals. The weakest space was aviation, specifically Interglobe Aviation, which corrected after operational disruption reports. Aviation names are extremely sensitive to operational metrics and fuel prices, so even minor updates can cause outsized intraday reactions. Financials stayed flat to slightly negative, reflecting a steady but cautious tone. Traders expect a larger move in BankNifty soon, but until flows expand, financials are playing defense rather than offense. Tech Mahindra led the rally, supported by both technical breakout patterns and favorable currency shifts. Its chart structure showed clean higher highs with consistent volume expansion, a classic breakout continuation move. TCS followed suit, riding both global tech strength and steady institutional flows. HDFC Life and SBI Life also advanced. These stocks often step in when traders want lower volatility instruments with smooth trend structures. Among losers, Interglobe Aviation corrected after operational guidelines were tightened and disruptions caused strain in scheduling. Such news typically triggers algorithmic selling, and today's price action reflected exactly that. Selective industrial and cyclicals corrected on profit-taking, especially after stretched rallies in previous weeks. Institutional flow today remains preliminary, as final numbers will be published by NSDL/CDSL later. Early exchange feeds suggest FIIs continued their cautious pattern in the cash segment, while DIIs provided steady counterflow by accumulating large-cap names. This explains why the market rises selectively but avoids broad breakouts. FIIs are not aggressively selling, but they are not aggressively buying either. DIIs are providing stability, but not a runaway rally. In derivatives, positioning hinted at cautious call writing near overhead resistance and put writing near immediate support, meaning institutions expect consolidation with a possible decisive move soon. Let's go deeper into the structure. Nifty daily chart. The daily structure continues to respect higher lows, a healthy pattern in uptrending markets. The region between 26,200 to 26,300 remains the next supply zone. Sellers have defended this area twice in recent sessions, and it will require strong institutional buying to break through. Support at 25,900 remains critical. A daily close below this level will break the sequence of higher lows and introduce short-term weakness. Nifty hourly. On the hourly chart, Nifty is compressing around 26,000. Compression often precedes expansion, meaning tomorrow's first hour will likely decide whether we get a breakout or a pullback. Nifty 15-minute chart. The 15-minute structure shows a tight, clean consolidation. The first candle tomorrow will show whether buyers step in immediately or wait for an intraday dip. If Nifty holds 26,000 for the first 15 minutes, momentum bias shifts to the upside. If it breaks 25,900 intraday, volatility instantly increases. BankNifty daily chart. Daily structure remains range-bound inside a large upward channel. Key resistance 60,000. Key support 57,400. This range is wide, meaning tomorrow's moves could be sharp once a side is chosen. BankNifty hourly chart. The index is coiling between 59,000 to 59,500. This type of coiling often leads to sudden, directional moves, either a burst toward 60,000 or a drop toward 58,500. BankNifty 15-minute chart. The short-term pivot is 59,200. If BankNifty holds this during the first 15 minutes, the setup opens towards 60,000. If it fails, the market will test 58,900 quickly. Nifty. Support 25,900, then 25,600. Resistance 26,300 to 26,350. Why these matter? 25,900 has been a demand reaction zone. Each dip here gets absorbed. 26,300 is where sellers previously triggered fast rejections. BankNifty. Support 58,900, then 57,400. Resistance 60,000. Why these matter? 58,900 aligns with multi-timeframe demand. 60,000 holds both psychological weight and option chain friction. These levels are not advice, they're structural signposts. Today's psychology was simple yet revealing. Traders wanted exposure, but not risk. They bought sectors with earnings visibility. They avoided volatile cyclical trades. FIIs remain cautious because global liquidity is still sensitive to policy signaling. DIIs remain steady because domestic flows, SIPs, mutual funds, continue to support dips. Together, this forms the cautious confidence theme of the day. A market that wants to rise, but refuses to run without confirmation. Tomorrow's opening 15 minutes will determine how this psychological balance tilts. Globally, geopolitical news pushed crude oil higher. US macro data kept Fed expectations stable. Asian markets strengthened, always a good signal for India. Domestically, corporate news led to stock-specific moves, especially in aviation and technology. There were no extreme macro events today, which puts even more weight on technical levels and institutional flows for tomorrow's session. Nifty outlook. Bullish scenario. Hold above 26,000 in the first 15 minutes. Test 26,300 breakout toward 26,600 possible. Bearish scenario. Break 25,900. Early sentiment flips. 25,600 becomes the objective. Bank Nifty outlook. Bullish scenario. Hold 59,200. Test 60,000. Stretch to 60,800 possible. Bearish scenario. Lose 58,900. Test 57,400 likely. The open will tell you everything. Tomorrow is not a prediction day, it's a confirmation day. Tech Mahindra, strong breakout, clean structure, volume-backed move. TCS, sector strength plus stable intraday VIX. Interglobe Aviation, mean reversion candidate after news-driven fall. HDFC Life, range-bound stability with upside bias. The first 15-minute confirmation rule. This rule prevents emotional trades and forces structure. The first 15 minutes absorb overnight noise, foreign flows, options repositioning, and index balancing. Once the first candle forms, and price either respects or rejects a key level, the day's character becomes significantly clearer. This is why tomorrow's 26,000 and 59,200 pivots matter so much. Markets closed steady, confident, but restrained. Nifty reclaimed key levels. Bank Nifty held its range. Global markets gave India the green light but not the green carpet. Tomorrow's trade will be driven by confirmation, not prediction. Levels are clear. Behavior is clear. Scenario planning is clear.